Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He is an investment newsletter writer of the Morgan Report. He's the author of 3 books on silver and the global economy. He is a keynote speaker on precious metals, commodities, and the global economy. David Morgan, thank you for joining me again.
Well, Jason, thanks for having me.
You're welcome, David. And now that silver is finally above $25 an ounce, we're recording this interview on Friday, March 4th, 2022. I think it's an interesting time for silver. I've been looking at some of that chart porn that some of these technical analysts like to show with like these 40-year cup and handles. The silver price looks like it could potentially be breaking out. But I get asked these questions all the time, David, about the amount of derivatives for silver. So on the LBMA, on the COMEX. So in your opinion, and I know you study this more than anyone else, you are the silver guru. How large is the over-the-counter derivatives position for silver and then also for gold?
Well, on gold, I know off the top of my head, somewhere around 600,000 contracts. I'm not sure what it is off the top of my head for silver, either the COMEX or the LBMA, but it's easily recognized just by a simple search engine. The point is on gold, and it applies to silver as well, is very seldom do you see the monitors want to see the open interest above 600,000 in gold. And we're right at that level right now. So historically, based on empirical evidence, in other words, things I could show on a chart, I could point every time we're at 600,000, the price gets hit. But we're at 600,000, roughly round numbers. And Jason, we're in a war situation. So I would think that the shorts are probably a little bit scared here.
The last time we had a really big silver short squeeze was in 2020, where the silver short squeeze, Wall Street Silver, became super popular all over social media. We also had it in 2011. Do you think we're going to have legitimate silver shortages in the near future?
I don't think in the near future, although we could. It's such a small market. It would take very little new buying and fiat moving into metal that would certainly could overwhelm the market. We're not seeing it at this time. What I do think longer term is it's almost guaranteed. And I know I sound like a broken record, Jason, but if you look at Matt Watson's work, he does an independent research analysis on almost all of the metals. And he's very interested in the silver market because the trend shows that the industrial use of silver in the next 8 years is going to be 85% of the market. So that leaves practically nothing for investment, silverware, or silver jewelry. And I agree with him. So, but the reason that gold moves based on monetary demand, period. I mean, jewelry, yes, it can fluctuate, but all the gold ever mined, 6 billion ounces, is above ground. And the supply demand means nothing because you're only adding 1% to the pile every year. So, people that focus on the mining supply of gold, and that's why the price moves, don't know what they're talking about, because it's like, issuing a new amount of stock. Oh, they diluted us. They added 0.5% more stock to the pile. It doesn't have much effect. It's all based upon several factors, but basically trust in government, inflation to some degree, but it's basically, it's an anti-government or anti-conventional money investment. And it's done by the banks as much as anyone. Right now, the holdings by central banks for gold physical is at a 31-year high. So you've got open interest that's at a high, you've got physical holdings at a high, and yet the Financial Times wrote an article about 3 days ago saying that, gold's basically a fetish and you don't know what you're talking about and da-da-da-da. I just actually put that on my weekly podcast, and I said to my, viewers, listeners, typical, look what they do, not what they say, because central banks are pretty heavily into the gold market.
Yeah, I would agree. Since January 2021, net central bank purchases of physical gold in tonnage have increased enormously. Also, investment demand in the private sector for China, India, other parts of Asia, Russia, Germany. those levels are at record highs not seen since at least 2014.
Right. So you asked about silver to short squeeze. I'm not sure I answered completely, but yes, it's always possible. I think it's almost inevitable further out. And I do think with what we've seen, depending how this current geopolitical situation gets, if it gets more tense or less, I think you'll see the metals market respond either way. In other words, if things cool off, you'll probably see the gold market and silver market cool off. If things become more intense, and of course, there's this other factor that started just before the Ukraine situation, which is Canada basically closing bank accounts based on actions by their citizenry. So this, of course, they backed off of that, but it did happen. It's not like, they're going to do it, but they never did it. No, they did it, and then they backed off. So this should really help people understand that you are not in as much control of your financial situation as you might want to be or think you are. And as you know, I'll digress a bit, Jason. I know you'll let me, but I did that interview probably a year ago on the bail-ins. And I've very few of my videos. I don't know if any of my videos ever went over 1 million. This one got 1.6 million views because everybody's interested in their money in the bank. What I told people is in the United States, you're not in charge of your deposit. You're an unsecured creditor, and the bank can bail in your money anytime. And of course, that woke a lot of people up. Now, did it move them from a bank account digital asset into a physical asset like gold or silver? The answer is, I'm sure some, but it was probably 0.000001%. Very few people really took action. They certainly heard it. They wanted to know about it. But there's a fine line between acknowledging it intellectually. I've been asked many times, what's it like when you buy gold? Well, I did it at such a young age. I hardly even think about it. But I have thought about it in later years. And what I recall is that it's an admission to yourself, to really your deep self, that, you know what, I really believe, because I put my money on my fiat on the line, that I don't know and trust the government, and two, that something could happen in my financial future and then I'm getting protection. So it's one thing to listen to these shows as infotainment, entertainment. I'm glad to know I'm knowledgeable about the monetary system. That's one thing. But to actually get into the physical market and take it home, put it in your safe, or put it in a safe deposit box, whatever you do with it, bury it in your backyard, that's a level that people actually say, you know what, I believe this. I'm not just watching it as, some kind of a show or something.
This type of bad behavior from governments, David, in the past, decades ago, it was associated with crazy emerging market governments. Normally, like it was a dictator and they didn't care about the local domestic currency and they were intentionally trying to destroy the currency, while the people in power running this emerging market government had physical gold, had dollars outside of the country, had all this real estate outside of the country. There were tons of stories about this with Argentina 20, 30 years ago. And now we're seeing similar stories come out about Canada and more developed countries. So it's crazy how dystopian things have gotten just in the last couple of years.
Yes. I mean, it's accelerating. As you know, you do a lot of good market research. I mean, a trend in motion continues and it usually accelerates. And the only way you know you're getting near the end in almost all cases is it goes parabolic. And that's what gives me some hope. I'm not, everything you said I've agreed with so far. But we are getting in this parabolic move, not in gold or silver. Stock market, yeah, a lot of markets are way overvalued. The commodities market's making a parabolic move right now, and it will come back and fill, settle at a higher price, probably work itself higher. But it's an emotional reaction for the reality that we're facing. The point being is that markets are not balanced at all. Stocks are still way too high. Commodities are still way too low on balance. And things that we need will pay a lot more for than things that we can delay purchasing of. If you can't, you can't go without food for very long, but you can certainly wait on a new TV set or a new phone. So you're going to see that situation manifest in the markets here. It's already starting, but not to the level that I think most people think. Most people think this wheat, corn, soybean market that's gone parabolic, that's temporary. And once, the war drums start to wind down somewhat, if ever, then things will come back to normal. There is no normal anymore. It's abnormal from here on.
I think one of the most important things that people don't understand about commodities, David, specifically like agriculture, mining, oil, and natural gas, it takes a good amount of time, sometimes many months, to bring on new supply. So yes, commodity prices are rallying, like you said. Yes, we have these commodities indexes that are finally outperforming the NASDAQ 100 now for the first time, I think, in years. But that's not fixing the supply side problems yet. And we haven't seen any evidence for a lot of these commodities that even though there's high gasoline prices, high oil prices, high food prices, demand has not collapsed. So there's going to be supply problems for at least, I would say, for at least the next 18 to 24 months, probably longer than that, especially in commodities like oil, where it's difficult to find more oil and to bring new mines online.
Well said. And this is a lesson, a hard lesson, a school of hard knocks lesson that some of these finance types don't understand. I mean, I heard one of our compadres talk about, one of these talking heads on one of the financial channels talking about he doesn't even care about oil because it's only 4% of the S&P. Well, without oil, nothing happens. Without energy, nothing takes place. I mean, you can't grow food without it. You can't transport food without it. I mean, you can't cook without it. So there's a lot of misunderstanding, and what you said is very pertinent. It's very germane. It's something that a hard lesson is going to fall on people as they realize, well, how come this is less money or that is less money, or maybe I got a wage increase, but I still, but food still costs me so doggone much money. And the answer is what you said, it's supply.
And we have Russia right now that's banned fertilizer for at least the next couple months. It will probably be longer than that. So without fertilizer, a lot of these farmers are not, especially in Brazil, are not going to be planting as many new crops. So these supply problems, these high prices, and the supply problems are creating the high prices. Well, part of it anyway. You also have all these governments and central banks that have printed many trillions of dollars in just the last 2 years. These supply problems are not going away in the short term.
No, they're not. And even I'd say the intermediate term as well, because that's not as bad as a mining project. Or once you turn off the mine, it's very difficult to get it restarted. But even agriculture, I mean, there is no real farming on the aggregate, meaning in the commercial farming. I mean, basically, it's a shallow sheet of sponge. It's a devoid material like sand. And the only reason you can grow on it is you take a big machine and you throw petrochemicals into the sand. So now it's got nutrients. And then you go over with another big machine, you throw seeds into that nutrient-rich sponge, and then you grow it. You have to replenish that every year, because if you just depended on nature to grow something, you threw seeds out there without any petrochemicals, nothing would grow because it's devoid of any nutrition. That's the situation we put ourselves into pretty much on a global basis. Of course, there's organic farms and all that. I get that. But I'm talking on the aggregate. I'm talking about what most people eat in processed, commercial-based food industry. That is really a major problem going forward. I mean, nothing, I talk about oil being so key, and it is. And if you look at agriculture, oil's still key there, but it's dirt. I mean, soil, something that no one hardly ever talks about unless you're, maybe got a little hippie in you or something. But it's extremely important, and we've been devoid of that in the last couple of decades, really. I mean, some farmers are well aware of it. They're very rare, just like a gold or silver investor. I mean, these are rare people. There's most people that are too busy following the nearest uptick in a crypto or in the stock market or in a derivative or something, rather than focus on, let's say, more long-term security.
Since the oil price is something that everyone's talking about lately, it's up enormously in just the last couple of weeks. It's an amazing pop in the oil price. With this geopolitical risk premium, I think the market is trying to force alternative supplies online. by moving the price to these high levels. There's also obviously speculators in here, but if the oil price stays at these levels or goes higher, a lot more supply in the next 4 to 6 months, whether it's deep water offshore or US shale oil production, it will come back online. But how do these high oil prices affect mining companies? Because I've been looking at the cost for a lot of these mining companies, and they were at record lows in the first quarter or two of 2020. Here we are 2 years later. The costs, some of these mining companies that were low cost producers, David, the costs are up over 20% in just the last 2 years. So do you think with these high oil prices and other costs rising, that the costs for these gold miners, silver miners, copper miners are going to rise faster than metals prices going forward?
Possibly. I mean, you did your homework. The rule of thumb, it applies differently mine to mine, but generally speaking, maybe a little on the high side. You could take about 25% of the all-in sustaining cost due to energy. So if you've got a doubling in oil price, and 25% of your nut to produce is energy, is oil, and it's doubled, you really are looking at going from perhaps a profit or a small profit to not, even with an increase in the price of the metals. So very sensitive to energy in almost all cases. And you're right. So far, it's probably just keeping up. I think gold has got pretty good margins in some of the bigger miners, even at these oil prices. Silver, some, but most marginal. Both gold and silver, most people don't know this, really don't have a huge monetary premium at all. All they really have is a small premium above the cost of production, which means they're treated by the market at this time as if they're just another foodstuff or something that goes away. I mean, corn has to be regrown every year. Same with wheat. Yeah, you can store wheat for a while, and corn as well, but you get my point. Money's the only thing that lasts indefinitely. And it's acting like a consumable because of a lot of reasons, primarily the way that the derivatives market is able to achieve a set price based on a paper contract. And that's true across the board, not just the metals, but the ags or everything else. And then you get to a situation we are like now, Jason, where no one wants that paper. They want the real deal. Ukraine isn't going to take a piece of paper for an export, or they're going to want something of value. So you might see more and more dislocations, not only what's going on with the SWIFT and Russia's payment situation, but you might see where there's a big shock. It wouldn't be that shocking to me, where Russia says, fine, you want our oil, pay us in gold or pay us in rubles. I mean, what if they said we only accept rubles for our oil? I mean, all of a sudden there'd be a big turnaround in the value of the ruble. So lots of unknowns and too many dislocations. They're hard to repair. It's like, what's a good analogy? It's like a very complex automobile where you've got, a tire goes out, you lose the drivetrain, the battery disconnects, and you throw a rod. I mean, there's a lot to repair now. And that's sort of a metaphor for what's going on in the financial system. It's not just disconnecting the battery and you can turn it back on and everything comes back and works fine. That's not where we're at.
There's a big trend in gold and silver mining, and I've been covering gold and silver now since 2008. It's a long time. It's almost 15 years. I haven't been in as long as you, but I've been in a long time compared to a lot of other people. So I've been in the bull cycle from 2009 to 2011. I was here during the enormous bear market that was so painful, where in like 2015, some of these mining companies had so much debt, they couldn't raise equity capital. Their costs were rising faster than metals prices. They were, according to some people I spoke to, some of them were 6 to 8 months away from bankruptcy. That's how starved for capital the mining industry was at that point. I was actually getting emails and messages asking if Pan American Silver and Silver Wheaton were going to go bankrupt, or Wheaton Precious Metals were going to go bankrupt at that time. But there's a big change I've noticed, I think, an industry-wide trend in gold and silver mining. It seems that really over the last 6 to 8 years, 5 to 7 years, 6 to 8 years, that a lot of these silver miners have bought either producing gold mines or a gold project to develop. Why do you think that is the case?
Margins are so much better. Silver, there's really hard to make a margin. Two reasons for that. One, obviously, is the price. I mean, if the price of silver was 50, then there'd be a good margin. But The other part of why the margin's so low is because 70% comes as a base metal miner. So most of the accounting methodology that takes place with your RTZs, your Broken Hill Properties, BHP Billiton, all these huge conglomerates that mine iron ore and copper and all kinds of metals, silver accounts for practically nothing on their balance sheet, but still produces a lot into the marketplace. So 70% from these big conglomerates, let's say, only 25% from primary silver producers. So they get to share in how the market determines price, and they use it as an offset credit the way the accounting methodology works. So they can take silver at whatever price they get for it. They don't care because it helps them lower their cost on their books for how much it costs to produce their zinc, or how much it costs to produce their copper. So it's really a convoluted system. It's really not fair. It's been that way for a very, very long time, and that's part of the problem. So the silver miners say, we've got to survive. Silver is a precious metal. And of course, some consider it a base metal. It's not true because of the quantity that exists. But regardless, what we find is that they have to mitigate their downside. And the way you do that is you become a gold silver company. That's the easiest thing to do.
Royalty and streaming companies, David, also seem to have benefit from what you just said, because these base metal miners have a lot of gold and silver byproduct. Silver, Wheaton, now Wheaton Precious Metals, they built their entire business buying those silver byproduct and turning it into streams. So giving those base metal miners enormous amounts of cash up front to help build their mine or fix their balance sheet, and then they get a silver stream. So there's not as many giant silver streams as there was when Silver Wheaton started, but mining companies, especially the base metal miners, are going to have to build new base metal mines, and there are going to be more gold and silver byproduct streams available, I think, in the future.
Yeah, well said, and thanks. I wouldn't say you corrected me, but you certainly added valuable information for everybody. Yeah, that was one of the brilliant things to do. It's like, well, these guys don't treat silver like it's worth anything. Let's build a business that does take advantage of that attitude. And Silver Wheaton, I commend them from the beginning. I've been with them a long time. I recommend them from the get-go, even when they went through all this tax crap. And I won't go off and digress too far, Jason, but I'm glad I hung in there. My position's, looks very good at this point in time, but it was a bit of a rough slug for a while. And as they diversify more into gold, it actually balances the portfolio out.
Well, what's funny, David, is these royalty and streaming companies are so heavily criticized by a lot of people in the mining industry and by paid newsletter writers, a lot of whom are recommending very risky junior mining stocks. But the truth is, and I've been in this industry, like I said, for 15 years, and you've been in longer, the banks, so these large Canadian banks, the large US banks, the medium-sized merchant banks, they stopped raising equity for the mining companies as the gold and silver prices started to crash in 2011. So the amount of equity capital available for even producing miners, let alone juniors, completely evaporated. So without these royalty and streaming companies replacing the financing available for that the banks in the past used to provide, I think a lot of mining companies would have went bankrupt already.
That's absolute 100% correct insight that most people don't even think about. So thank you for bringing that to everyone's attention, Jason. And I'll say furthermore, a bit of a plug for the Morgan Report, but I had one of my candidates that worked for me early on, years ago. He has been with me for quite some time. And he was quite good, came from Wall Street. He proved himself to me and did a good job. And he put his wife's portfolio in the Morgan Report, which, as you know, is top-tier cash rich, a lot of streaming royalty companies, and then a handful of junior producers with upside potential with the producers. And then just money you can afford to lose in some rank speculation. So I say rank speculation. So really, it was very conservative. And then he, being in Vancouver, in the middle of the junior mining space, had the inside track. I mean, he could talk to anybody at a coffee shop. He could go into any junior mining company. He knew almost everybody, rubbed elbows with, played racquetball with, did golf. I mean, everything. So you just get information. So he was buying junior after junior after junior, this one, that one, the other one. And guess what happened? At the end of a couple of years, his wife had made a fairly good, significant increase in her portfolio. And his, I know everything there is to know about juniors, I live here, failed. So the junior space is a lot more difficult than most people realize. The problem with the junior space is they're not given the whole story. The whole story is that the people that finance the juniors from the beginning get an advantage that the average investor never gets, but no one ever tells you about that.
And now royalty and streaming companies are conventional finance. So here we are, royalty and streaming companies. 10 years ago, they were considered extreme. They were considered very risky or very exotic type of financing. Why would you go and get financing from royalty and streaming company? Now it's considered a normal part of a capital structure that if you're going to build a mine, you sell a stream on it, then you don't have to raise as much debt from the bank, because what the average person doesn't understand, David, is for a mining company to approve the debt to build a mine, it could take 6 months or more, especially if it's a large mine and you have multiple banks signing on. The due diligence process is very bureaucratic. There's a lot of red tape. And so if the mining company needs cash, a royalty and streaming company like a Franco-Nevada, like a Wheaton Precious Metals or Royal Gold, they can get a deal done for a significant amount of capital, 9 figures. They can get that deal approved in 6 to 8 weeks compared to a large bank that will take over 6 months. So it's way more capital efficient, and the cost of capital for these royalty and streaming companies is lower than the miners. So I view royalty and streaming companies as win-win, whereas a lot of people don't view it as that way. I think they've allowed for more efficient financing for a lot of these mining companies and juniors too.
Exactly. And, people say, well, the royalty companies are taking advantage of these small miners. Look, you're allowed to have whatever opinion you want. But when you're in the business, what you know is its cost of capital is going to be something. And so what is it? And if the deal wasn't good enough, you wouldn't take it. So, look, there's both people have to sign the contract. So I don't have any issue with it. I just like the royalties because they are so lucrative and your downside is so much mitigated. Whereas with a regular company, not talking juniors, just a producer, you've got much more to worry about than you do once you sign a royalty contract. So I want to add to that a little bit, Jason, and that is that you're going to see it in the cryptocurrency world because for the precious metals backed versions. I'm involved right now with a small, has not been done. We've spoken one time to a small gold producer, and we're thinking of just doing a very simple offtake agreement, a royalty type of agreement that we could get part of their gold for financing. And that gold would go right to our vault to tokenize those into our AGX coins. So I think that's another area that will be developing, just like it developed from the early days. I think Franco was one of the first. Silver Wheat was obviously the first to do it for silver, but it is a great business model. And again, if you don't like the terms, if you don't like the terms on a royalty or streaming model, take a look at what these juniors finance at. Talk to one of these people that even call themselves loan sharks, and you'll get an idea of what maybe not a great deal is to stay in business as a junior.
There's also bidding wars now for these royalties and streams. So, that's the bidding wars by the royalty and streaming companies for these royalties and streams. That's benefiting the mining companies because the mining companies are getting more capital.
Yeah, well, when I started Lemuria Royalties, I learned a lot more about that side of the business. And, I'm always trying to learn more. I learned a lot in that first couple of years. And there were a lot of companies that had, certificates in their desk drawer, as a metaphor, that had royalties that they'd forgotten about, right? They did a deal, and part of the deal was, well, you get this much of a, net smelter royalty, or, after so many years and we kick in this many ounces, you start to acquire 1% of what we mine. And, and there's an aftermarket for those things, as you're talking about now. But, that was kind of unheard of. Most people just, didn't pay much attention to even having those agreements. And now, of course, there's a whole market for them.
Oh, yeah, there's an enormous market for them. And you've seen a lot of these large mining companies, they've sold off their royalties as packages for cash. So you had Pan American Silver, they spun off all of their royalties and streams into Mavericks Metals. And that's been a very successful company the last 4 or 5 years, I think.
Exactly. And you're right. I think in a free market, what you're really describing to me is a free market. Someone had a good idea. Franco-Nevada will give them credit, maybe Royal Gold, some of the early adopters, and said, look, we want to help mining companies and we're going to do it differently. And here's what we're going to do. And it's very successful. Now, the part about Franco is, of course, they got the Midas mine, and that turned out to be just unbelievable relative to what they thought it was when they bought it. But sometimes you get lucky, you know?
Yeah, now they have a portfolio, I think, of over 200 cash flowing royalties and streams. So it's like a cash flow machine.
Exactly.
And the other good thing, we'll just talk about royalties and streaming companies for another minute or two, and then move on to other silver topics. Since David is a royalty and streaming expert, I learned a lot about that business from David, along with Nolan Watson of Sandstorm Gold. The other good part in this environment, David, you have rising energy costs. You have rising materials costs to build a mine. You have mining company employees in the emerging markets talking about going on strike, wanting higher wages. If you're a royalty and streaming company shareholder at Franco-Nevada, Wheaton Precious Metals, Sandstorm Gold, you don't have to worry about those things. You don't have to worry about oil costs going up another 30% and destroying profit margins.
Exactly. That's right. It's a great way to participate in an industry that you're favorable to and mitigate the risk. I mean, there's risk everywhere, especially mining. And because of the ability to invest in these type of investments, you're really, really a lot better off. I had one young guy got a hold of me years ago, and I just told him to start off with Franco. And I think it was $30 at that time. And it was going up and down, just very small, 0.5% or something. And he was getting panicked. He never bought a stock in his life. And it went below where he bought it. And I said, you know what? I can't give you your money back, but I can refund your subscription. Well, it took off. And then I watched him, and a year went by, and he renewed. So, just holding that one company, I think when we, I owned it from the beginning, and then it was bought by Newmont. And then Newmont spun it off again. When he spun it off, I think it started at $19 a share. And now I haven't looked. I've got it on my ticker. Was it 150 a share now or something?
But there's been dividend increases, I think, every year for the last 12, 13, 14, maybe even 15 years, though.
Yeah. And even Pan American, I mean, I bought it at like 250, and the dividend is small in percentage terms. But if you look at it from the time I bought it, it's like a 10% dividend to me. So, I mean, that's investing. Now, not that we don't speculate, but the problem with the industry, in my view, let me reframe that. The problem with the newsletter industry that surrounds gold and silver or the base metals has a lot to do with nothing but rank speculation, which is gambling. And it's okay. I do a little bit of that, but I use the word little. Now, again, people get misinformation that, I never bought a major in my life, only buy junior mining companies. Well, there's a reason for that. And again, I'll repeat, there is a distinct advantage that the financiers have that the public never gets or never will get.
So I want to transition now to supply and demand for silver. The Silver Institute in the last couple of weeks just put a new silver research report out for 2022, talking about how they're predicting record demand for silver in 2022 globally. I think the number is 1.12 billion ounces of demand. Do you think a lot of that demand increase, you talked about industrial demand, is a lot of that increase from industrial demand, or is a lot of it also because of the Sprott Physical Silver Trust that has become so popular in the last couple of years?
I read the report. I only read it once. Haven't studied it yet, but I think it's both. I mean, one thing about the PSLV, it's very popular among silver advocates, but it's only about 1/10 the size of the SLV. So as important as it is to people philosophically, it really doesn't have nearly the inflows that you get from the SLV, in or outflows.
So the major investment demand increases then are from the retail investor buying physical silver in coins and bar form then?
No. I don't know for 2021. I do know for 2020. So I think 2021 will be similar. So I'll make that statement. So in 2020, you had over 300 million ounces by institutions, and that all went into ETFs. And you had about 200 million in retail. So 3/5 was institutional and 2/5 was retail. And it was over 530 million ounces went into investment in 2020, a record beyond records, and silver went from around 18 to 28, we'll say, so a $10 move. 10 on 18, that's a pretty good percentage. I don't have the numbers for 2021. They aren't published yet. They won't be out until April or May. I don't know if they'll be that robust. The point, Jason, that's phenomenal to me, watching this market for decades, as you well know, is that amount of silver demand exceeded the amount of industrial demand. 50% of the silver market now is industrial demand. It's a billion-ounce market. Half of a billion is 500 million. We had 530 million investment demand. You get a few more years like that, and you will not be able to hold the price down. You might see a paper price of X, but the coin shop price has already got huge premiums. But you could still procure silver off of either off the COMEX, which is kind of the place of last resort, or from a refiner based on the paper price of silver. There's no doubt about it. Until that market is inefficient, you're not going to, you could see some real disruptions. There is in the retail side, and has been for nearly 2 years now, that if you really want physical silver in any retail form, be it a 1 ounce coin, 1 ounce wafer, 10-ounce bar, 100-ounce bar, kilo bar, any of those type of products, you're going to pay a very large premium to do it.
And you might be waiting 6 months or more for your COMEX delivery, depending upon how large of an order it is. Because in 2011, you would get your silver, but you were waiting a long time, or they were trying to force cash settlement. So we could head there. But I think you outlined that we are going to see supply side problems over the next 3 to 5 years for silver, unless prices go substantially higher to bring on new silver supply.
That's right. And to repeat back to you, what people need to hear one more time is I'm aware of at least 2 deposits that have billion-ounce potential. So you've got, in the ground, 1 billion ounces. That's 1 year total demand. So if you could bring that all up to surface in 1 year, you just double the annual take of silver. I mean, that'd be phenomenal. I mean, think about doubling the oil production in a year or something. However, you can't. So it may be a 20-year mine life, maybe a 30 or 40-year mine life. The point is, you just don't turn the switch to get there. And depending on the oil structure, depending on the political climate, depending on the environmentalists and everything else, you might have one of the best deposits, highest grades going, and not be able to put the mine in, or take 6 years to do it, where it really could take 6 months. There wasn't any red tape.
Yeah, I was actually going to ask you exactly about that. Pan American Silver has a deposit similar to what you said. It's called the La Navidad deposit. I think it's almost 500 million ounces of silver in Argentina, but it's been delayed for, I think, over 7 or 8 years now. But recently, in the last month or two, there were stories coming out that Argentinian province was thinking of allowing the permit approval to build the mine. So do you think that mine is actually going to get built, or do you think that the mine's going to be delayed for many years longer?
As long as I could do it real time, yes, we do think it will be built. That's today. Could change. My opinion could change tomorrow, but yes, I do.
Well, of course, your opinion can change. Look at what's happening with these governments. Look how greedy. I'm going to go on a rant here, David. Look how greedy these governments are in Panama, in Chile, in Peru, these other countries. As soon as the copper price went above $4 a pound, they were immediately talking about new royalty taxes on copper. Well, that's not exactly going to incentivize these mining companies to make large investments and either increase production at existing mines or make big investments, 9, 10-figure investments into a new mine in their country.
Yeah, it all has to do with collectivism. I mean, it's going political. I'll be slightly political. I mean, it's they're making a lot of money, so we need part of it because we're here and we're the government, and that's not free market. And, and I could take both sides. I don't want to right now, but the point is, you're right. I mean, let's let them get a good profit. Let's see what happens. And then maybe later on, negotiate something. But as soon as it looks like it might go, I mean, they're playing a spike. Is the spike sustainable? Yes, I think it is. It will ebb and flow. It will back and fill. We will establish a new price. But if we go into a inflationary depression or even hyperinflation in some instances, you can't mitigate it because you don't know what the true price is, because the value of the currency starts to deteriorate so fast Well, contract you signed on Thursday isn't good by 2 months from Thursday. I mean, that is not going to happen, in my view, on the U.S. banking system. But there's so many other problems. It's like, hey, what if my deposit that's been there for 10 years and I know my banker and I have lunch with them every third month bails in my account, not because he doesn't love me, but because the government told him we're doing bail-ins on everybody. I mean, there's so many concerns. I can't believe, Jason, as long as I've been doing these updates for people that haven't been able, not me, but the industry or the message, I'll call it. I'm just a messenger of the message. That the message is so strong that you've got to have something that has no liability to it, hasn't reached more people. I'm just astounded, people that quote unquote know me, but it's entertainment purposes only. They haven't taken any action. They haven't done what we talked about at the very beginning. Gone to themselves, bought some real metal, and acknowledged to themselves it's possible something could go wrong with the financial system.
Yeah, I just want to clarify what you're saying. So I think a lot of the silver community, puts a price target on gold or silver, a very high short-term price target to sell bullion to get commission. And I think that that's the wrong idea for why people should be buying physical metal. I think you highlighted an important reason why people should buy metal. It's an insurance policy. It's portfolio insurance. It's to protect your savings. It's to pull wealth and savings out of the banking system in case there is a bail-in, in case there's a rules change, in case there's a currency devaluation. I mean, they could temporarily shut the US did this a long time ago when FDR devalued the dollar against gold. He shut down the banks for a couple of days and then devalued the dollar by over 30%, I think, against gold. And other countries have done similar tactics where they've shut down their banks and then they devalued their currency within a day or two. There was a forced government devaluation. They stole the other foreign currencies in your bank account. I mean, that hasn't happened in the US, but it could happen in the not too distant future. And so if you're buying metal like physical gold or silver, you're not buying it necessarily as an investment for immediate price appreciation. You're buying it to protect yourself in case these politicians and bureaucrats and central bankers do even more stupid behavior.
The money of last resort. I mean, if you have some, you've always got it until you need it. I mean, you look at, war situations, disruptions. I mean, people that had a little pouch of gold were able to, leave, move on, and rebuild. People that didn't have as many options, that's for sure. And you don't need to go overboard. A lot of people hear the story, they understand it, and then they, maybe put too much. I mean, look, capital formation is important to the capitalist system, which means that if you got a great idea and it's going to benefit you and humanity, why not invest in it? And there's been all kinds of things like that have taken place during my lifetime. But the monetary system as it exists has been, been on one big bubble after another big bubble, and they keep correcting. But this one that we've got now probably won't be able to be corrected. It will be probably the end. And we're seeing that really right now manifest with the SWIFT system being, let's say, tested. And how do you, get Russian oil when they can't use the SWIFT system? Well, there are ways to do it. And the market's pretty efficient at finding gray markets, black markets, free markets, whatever you want to call them, to make things move. But there's a huge disarray. And going back to my metaphor before, it's like the car that has, the drivetrain's gone, the engine's shot, the battery's kaput, and the tires are flat. We're in that kind of a situation. We're going toward that kind of a situation. That's a metaphor for the direction we're going. And so I don't think it's going to be easy to say, oh, we made a mistake. You know what? Let's get Russia back into the SWIFT system. We just were joking. I don't think that's going to happen. And even if that were to occur, you couldn't bring it back very easily.
In my opinion, I think the system totally collapsed in 2008, 2009, and many trillions were created for new asset bubbles, for secret bailouts, to bail out foreign governments and banks, to restart the system. And the system's been a zombie system with asset price inflation, asset bubbles, and crazy rules changes with stagflation and shrinkflation ever since. The system's very, very fragile, and there's tons of stuff going on behind the scenes with currency swap. We're probably going to see that in the next couple months. if Russian banks continue to have problems, their counterparties are these large European banks, David. I heard from a hedge fund manager earlier this week that some of these large European banks could potentially collapse too with the Russian banks. So then the European Central Bank is going to need trillions in currency swap line bailouts from the Federal Reserve. So this is how messed up the system is.
Well said. I tend to agree with you. I mean, I know how close we got to absolute, it was the end. A lot closer than most people think. If the Fed didn't inject what they did at the time they did it, it would have been all over. There's that other 20 trillion never talks about outside of Dr. Mark Skidmore and Catherine Austin Fitts. Rob Kirby brings it up quite often that this 20 trillion that's off the books also exists. So the national debt of the U.S. isn't really 30 trillion, it's 50 trillion. So there's another number for everybody listening.
And then the unfunded liabilities.
Right. And then keep pumping it up. So I agree with what you said. I think that there's been a modicum of improvement in some sectors, but most, you're right. We're nearing the end. I mean, like the old proverbial kick the can down the road. The can has hit the road and it's done. And whether or not the powers that be can resurrect this to their satisfaction remains to be determined. And in my report, which I'm just finishing up and I'll publish this weekend, and since, I get paid to do what I do, there is one of the latest coming out of, say, the banking elites, is that they're thinking now of putting their CBDCs, central bank digital currencies, on top of a public platform. In other words, instead of deriving their own blockchain system from scratch where they own it, they're thinking about using I'll just throw a couple out there, Algo or Ripple or one of these, and just putting their CBDC on top of one of those, which is very interesting. And why would they do that? Because they need to do it pronto. That's why they would do it. So lots going on, Jason. I'm comfortable having some stuff that's shiny that I could put in my pocket and travel anywhere and recognize anywhere in the world. I'd probably negotiate almost anything I needed as long as it's available. Money doesn't solve all problems, but it gives you a lot more options if you have real money than if you don't.
Yeah, I agree. So a couple more questions on the silver market before I let you go. Annual silver production in Peru has collapsed in the last 7 to 10 years. I would argue it's because of bad government policy there that's not incentivizing the miners to grow their businesses or build new mines. And it is now declining in Mexico. Are there other countries where silver production can increase a lot going forward to offset the major production declines in the former top 2 silver producing countries?
Tough one. And I'm a deep thinker. Off the top of my head, no, I don't think so. I think also, let's say that, as we continue in this war, and it's more than just Russian-Ukraine people, this is a resource war. It's a banker's war. It's a financial war. It's a lot of things. But let's go to the resource side. The most important resource is oil. The second most important resource is silver. You can argue with me, but I can make a strong case. I won't take the time. So if you're Mexico, and you're having an oil problem and you've got silver, well, maybe you will negotiate with a different attitude and say, Russia wants gold for their oil. What about silver? So a lot of things could change literally overnight. Now, I know there's legislation and all that, but a lot of these countries are pretty good at nationalizations when times get really, really hard. And it's hard to go into a jurisdiction that's not yours, even though you've had a contract, and say you're wrong. And I'm not saying any of this is going to happen. I don't want to upset any of my people that own, First Majestic or any of the stuff that we have on the portfolio. But what I am suggesting is that these are trying times. And when you have trying times, you want the end product. That's why I've advocated the physical metal from the get-go. I don't even want you in the royalty space unless you have some physical metal at hand, because that's the purpose of precious metals. Beyond that, you can make a lot more money in the royalty space than you can in the physical metal space. I mean, look at Franco, from 20 to 150, dividends increased all those years. Look at my Pan American, 250 to whatever it is now. Yeah. And those are quote unquote paper investments, a real metal being really mined that's sold on the open market, all of that, of course. But nonetheless, you get my drift. That's why I think the mining industry is so fascinating, because you get to buy the goose that lays the golden egg rather than just buy the golden egg. You get to build a business or be part of a business. But I digress. Bring me back in. You've got another question.
Well, some of these large silver deposits that you talked about earlier, and we mentioned one, La Navidad, and there's a couple in Mexico. I think Silvercrest Metals has one. Are we going to have to see silver at $35, $40, $45 an ounce and the silver price to stay there for 6 months, 12 months, or longer before the capital is raised to go and build a large-scale silver mine again? Because I'm not seeing a lot of these companies able to raise a lot of the capital to build a mine for silver. I'm seeing that for copper. I'm seeing that for gold. I'm seeing some silver byproduct, but I'm not seeing these silver mines that you used to write about in the Morgan report, where a lot of these companies in the past cycles, whether it was Pan American Silver or Silver Standard, now SSR. SSR, by the way, David, they just sold Pizzeria, which was a 500 million ounce silver deposit. They dumped it in Mexico because it's higher cost. They dumped it to Endeavor Silver for a tiny amount of cash. And Endeavor Silver is only going to build a tiny little underground mine on that massive deposit. And there's only, I think, 28 million ounces of silver reserves for the underground mine. So I was just shocked to see such an enormous potential silver mine, and it was dumped for so little, and they're only going to try the underground mine.
Well, it shows what mispricing does. It shows what a controlled market does, or price control. I mean, basically, believe it or not, folks, silver is price controlled. And if it was a free market where its true value was determined by the market, then you wouldn't have these financing issues. But you're spot on, Jason. I mean, yeah, 30 is a good round number. I'll stay with that. I don't know the number. It's a preliminary economic assessment. A PEA has to be done. As you said, it takes 6 months. You get a lot of bureaucrats, and they come up with a number and they say, okay, we're going to finance it. All of that aside, I'd say 30, 35. And, that's a pittance for what silver's really real value is. But I don't think we're going to see those kind of prices immediately. I think they will absolutely get here. But I think I do think there'll be a time in the not too distant future where the derivatives market gets redefined. I think a lot of this stuff, and it may not come from silver or gold, it may come from derivatives in the interest rate market between the European banks and the Russian bank. Then they're going under, and they realize that this stuff isn't worth the paper it's written on, and you can't trust all these derivatives. And you can't. It scares me, Jason, to be honest with you. It really does.
Well, there's a ton of secret ballots going on behind the scenes. They may already be happening. In fact, look at how cheap these Russian oil stocks are. But then if you're an American citizen, you might not be able to sell them. I think these Russian oil stocks like Lukoil, Gazprom, Rosneft, they're discounted, I think, 95% to the value of the business. The business is selling their oil and natural gas in dollars. But if you're an American citizen trying to buy these stocks over the counter, you might not be able to sell them then because the government's changing the rules.
I put 6 of them in the report with a highly cautionary statement, because we published in probably 50 different countries around the world. So it's not just the US and Canada that reads our reports. But, if you've got the guts, it might, you're buying it awfully cheap, but you got to be real careful. As you said, are you going to be able to invest, or are you going to be able to get out? I think it's probably worth the risk on a small basis for aggressive accounts that understand risk. But boy, some of those are awfully juicy when you look at what the yields are and what you're buying with your fiat. It's amazing.
My educated guess would be that there's some financial warfare involved, that maybe a U.S. government agency, maybe one of the plunge protection teams was attacking the Russian currency, was attacking these Russian oil stocks with shorts. And then you have all of these coordinated efforts by these large corporations here in the West, in the US, the United Kingdom, and Europe. And they all seemed in the last 10 days to all just cancel all their Russian contracts. It seems very coordinated, David.
Yeah, I wrote about it, not quite from that aspect. I love to stick with facts, and you're right, and you're very bright, and I'm really enjoying that interview. But I went through the oil. I wrote, I was right, the editorial, then I examined gold and silver pretty deeply, and oil. I've been doing a lot more on oil because it is so critical. And just line item after line item after line item, what you just said, all of these Westerners bailing on the Russians, just walking away. And it's pretty sad. Business should transcend national borders. I mean, if we don't trade with each other, we shoot at each other. And obviously, that's coming true, and it's sad. It's not needed. And I'm not going to say much more because it's not going to enlighten anyone that's listening to our interview.
This is mostly about like markets and investment opportunities. Don't want to get too geopolitical because a lot of people are being swayed right now by news agencies and government propaganda. So we don't want to go there. We don't want to be censored by YouTube, or I don't want to be censored by YouTube any more than I already am. David, I want to thank you so much for your time today. I really enjoyed our discussion. If my listeners want to follow your work at the Morgan Report or follow you on Twitter, how do they do so?
Yeah, just get on the free list, which is at themorganreport.com. A first name and an email. We'll double check it with our autoresponder. If you're interested in making money in the resource sector, it's beyond silver. We do gold, lithium, the rare earth elements. We've done good with zinc. We're doing really good with uranium. Lots in the sector. That's a paid service. Go to the subscribe tab at the main menu, and you can read about it. There's a video that explains it. And then on Twitter, it's at SilverGuru22, and I'm pretty active on there. There's a couple of people that have access to the account. You can usually tell if it's me. It's usually serious in nature. If there's something really funny and I get 100 new subscribers, it's because one of my friends put up something humorous on my Twitter feed.
Oh, you're memeing? You're doing financial memes?
Yeah.
Well, I really enjoyed our discussion today, David. I learned a lot about royalty and streaming companies because you actually built a small royalty and streaming company business over the course of a couple of years, and then you sold it. I don't know if our listeners are aware of that. So you've been covering royalty and streaming companies for over a decade, and you were also an entrepreneur in the royalty and streaming sector. And I think there's very valuable insights into that industry and also silver.
Well, thank you so much, Jason. It was my pleasure as well. I really enjoyed it.